Welcome to Gov Clarity, where we break down complex government procedures into clear, easy-to-follow steps. Please note, we are not a government agency. We aim to help you navigate these procedures with confidence, but always verify information through official government sources. You'll find both our complete guide and official links in the More section.
Breaking news! The Department of Education just announced that starting May 5th, they will resume collecting on defaulted student loans for the first time since the pandemic began. This affects over 5 million borrowers in default and includes withholding tax refunds, Social Security benefits, and soon, wage garnishment. If you're currently in default, contact the official government default resolution group immediately before May 5th to discuss your options before collections begin. With this urgent update in mind, let's dive into understanding all your repayment options. Feeling overwhelmed by your student loan repayment options? You're definitely not alone. Over 43 million Americans are trying to navigate their federal student loans right now. Today, we'll break down your current options in simple terms so you can make confident decisions about your loans. Let's start by understanding what's happening right now. Federal student loan repayment has changed a lot recently, with new developments continuing into 2025. A recent court order has temporarily paused some repayment plans, creating confusion for many borrowers. Here's why: choosing the right plan truly matters for your wallet. Someone earning $50,000 with $30,000 in student loans could pay between $143 and $333 monthly, depending on their plan. That's a difference of over $22,000 over 10 years. Now let's explore your available options in clear, simple terms. The Department of Education offers two main types of repayment plans. First, let's look at traditional fixed payment plans, which are based on your loan amount, not your income. The standard plan divides your loan evenly over 10 years, giving you the same monthly payment until you're done. The extended plan stretches payments over 25 years for borrowers with over $30,000 in federal loans, making monthly payments lower. The graduated plan starts with lower payments that increase every 2 years. Now let's turn to the second category: income-driven repayment plans. Income-driven plans adjust your monthly payment based on how much you earn and your family size. These plans typically offer loan forgiveness after 20 or 25 years of payments. The Saving on a Valuable Education Plan, also called the SAVE plan, is currently on hold due to that court decision. If you are already enrolled in SAVE, your loans are temporarily placed in interest-free forbearance, which is a temporary pause on your loan payments that your servicer can grant in certain situations. This means no payments are due right now, and no interest is adding up. Important note: this special pause time might not count toward your loan forgiveness timeline. The Pay-As-You-Earn plan, or PAY, stopped accepting new enrollments in July 2024. Applications for the IBR and ICR plans remain available if you are eligible, though processing times across all plans might currently be longer than usual. The Income-Based Repayment Plan, or IBR, offers different terms depending on when you borrowed. This plan requires showing financial hardship, meaning your standard plan payments would take up too much of your income. The Income Contingent Repayment Plan, or ICR, is the only income-driven option available for Parent Plus loans after they are consolidated. There's also a special program for public service workers that you should know about. Public Service Loan Forgiveness, sometimes called PSLF, offers tax-free forgiveness after 10 years of qualifying employment. Qualifying employers include government organizations and nonprofit organizations with 501c3 tax status. Now, let's walk through exactly how to select and apply for a repayment plan. First, gather these 3 essential items: your recent tax return, your current pay stubs, and your Federal Student Aid ID, or FSA ID, which is your login for the government student loan websites. Next, visit StudentAid.gov and log in with your FSA ID. Select Manage Loans and then Repayment Options from your dashboard. Use the Loan Simulator tool to compare different active plans and see estimates of your monthly payments. Keep in mind, these are estimates and may change based on the current legal situation. For any income-driven plan, you'll need to update your income information annually, though many deadlines have been extended due to recent changes. If you were previously on SAVE, the earliest you might need to recertify is February 2026. If you're pursuing public service loan forgiveness, make sure to submit the PSLF form every year to verify your qualifying employment. Here's what to expect after you apply for a new repayment plan. After submitting your application, expect processing to take about 30 days for plan changes. If you're consolidating loans, this may take up to 60 days. Your loan servicer might place your loans in a temporary processing forbearance during this transition. Unlike regular forbearance periods, this specific processing time may sometimes count toward forgiveness programs. Now, let's review some common mistakes to avoid. Don't simply select the standard plan by default if you're struggling to make payments. Explore income-driven options first. Avoid missing recertification deadlines, which can cause your payments to increase suddenly. Be careful about refinancing with private lenders. This permanently removes all federal benefits and protections, including forgiveness options. If you're facing severe financial difficulty, consider asking about hardship deferment or unemployment deferment rather than simply missing payments. During these deferment periods, interest typically continues to add up on most loan types, increasing your total debt. If your loans are in default, your main options are rehabilitation or consolidation, as the Fresh Start program ended in 2024. Contact the federal government's Default Resolution Group at 1-800-621-3115 before May 5th. Bankruptcy rarely discharges student loans, so planning your repayment strategy is essential. Ready to take action despite the current uncertainty? Here are your next steps. First, gather your tax return, pay stubs, and FSA ID login information. Visit StudentAid.gov to review your current loans and see which plans you can access right now. If you work in public service, prioritize submitting your employment certification form. For a detailed breakdown of all current options and the latest updates on program availability, download our comprehensive guide using the link in our description. Our guide provides step-by-step instructions and clear explanations to help you navigate this complex landscape with confidence. You can absolutely manage your student loans successfully, even as programs continue to change.
Thank you for watching GovClarity. Remember, you can find our complete guide and all official links in the More section. If you found this helpful, please like, subscribe, and share it with others who might benefit. Remember to hit the notification bell so you never miss our latest videos. We're here to make government procedures easier for you every step of the way.